Looking for investment opportunities outside what some may consider mainstream investment ideas can sometimes be tricky. Today we're talking about Vietnam. It's been an area of interest for a while for some, and the region is considered at the forefront of what some call frontier market investing. Why? What's it offer? And how can we as investors in the West get a slice of the opportunities available? We're talking now about Vietnam Enterprise Investments Limited. It's a fund traded on the main market of the London Stock Exchange on the FTSE 250 under the ticker VEIL. And with a market capitalisation of £1.5 billion, it's certainly worth looking at. Let's catch up now with Thao Ngo from Dragon Capital, where she's a Deputy Portfolio Manager. Welcome. It's a pleasure to have you here in the hot seat. I wanted to ask the straightforward question, why Vietnam? Why should we be interested as investors in Vietnam at the moment?
Thanks, Jeremy, for the question. Vietnam has delivered a strongest GDP growth all over the world with the growth of 6 to 7% per annum. And it's worth to know that Vietnam has a big local domestic consumption. And with the 90 million people, with the average age of 32 years old, we have a big demand for consumer to grow. And currently the countries have a big theme to grow thanks to the strong urbanization, the formation of middle class, and also strong local consumption. And we has been have a strong economic growth thanks to the FDI driven with around $20 billion per year, and there's a moving from China due to the supply chains corruption, and they move to Vietnam. And the exports number also looks strong. Its growth more than 20% for this year. So with all these factors, it gives Vietnam a well positioned to deliver a GDP growth of 7% for this year.
I want to take a look at the fund in just a minute and how that's performed, but I want to pick up on that point about China if I can.
Okay.
So I think it's important for us in the West to get a better idea as to how influential perhaps maybe China is. Does China cast a shadow over investing in Vietnam? In other words, when looking at Vietnam investments, should we consider a discount because of the impact that China might have?
I don't think it's a big impact on the Vietnam growth, although we have a long borderline with China, over 1,500 kilometers. The reason lockdown, zero COVID policy of China did have some impact on the trade of Vietnam, but not much. And we see that like the Vietnam economy now reopen after the COVID. The COVID is no longer an issue for the economy. For so far this year, we already opened the gate, and we will welcome more than 5 million people will travel to Vietnam this year. And so far, the Vietnam has been right on track to deliver the GDP growth of 7% for this year, because it's the first quarter we already have 5% growth for the GDP.
So in the West, how can we invest directly into the Vietnamese market?
It's not easy to invest direct to the Vietnam market. So it's better if you can invest in a specialist that's focused investment in Vietnam, like VEIL. We listed in London Stock Exchange and also a member of FTSE 250. So you can buy to our fund and to get a full exposure to the Vietnam market.
Okay, so that's a way to overcome the hurdles which would otherwise be in place, yes, I think correct. You're saying. So let's take a look at the fund in some more detail then, because I wanted to get an idea as to what the fund is about. You've briefly touched on it, but let's get some more detail, because if I was to come to the FTSE 250 and look at the fund, what am I buying?
Our investment strategy is to deliver a superior long-term growth for our investor. So our strategy is to pick up the sectors and also the company that will benefit from the long-term growth of Vietnam economy. And with our strong big team in Vietnam with deep local understanding, we could pick the best company that could outperform the market. Our annualized return during the last 25 years is 13% per annum. And in the past 5 years, we outperformed the market by more than 30%. And for example, last year, we also outperformed the market by 8%. So, in both long term and short term, we try to manage to deliver outperformance.
So what are you benchmarking against?
We are benchmarked with the Vietnam index in 3 years rolling basis. And so far, our performance are encouraging with our performance in both short term and long term.
Let's take a look at the share price chart, because I think it's worth looking at this in some detail. And I've got here a chart that goes back to 2017. And the low point here, as we know from experience now from the COVID lows that we had back in the middle of March 2020, down at 314. I think there's something like around about 150% upside. Since then, we have seen a 15, 16, 17% drop. But of course, the markets have been under pressure a lot over the last 5 or 6 months or so. Let me just quickly ask you about from the COVID lows to the highs that we had in the last few months. What's been driving that market? Because in the West, we've seen a lot of money going into technology. We've seen a lot of money going into a lot of speculative areas of the market. Is that what you're seeing in Vietnam?
You see that from the COVID low base, Vietnam has also benefiting from the low interest rate environment, and also the penetration from the domestic market. During the last 2 years, the new account opening from retailer increased four times compared to the previous period. And the market cap of Vietnam market now, to your surprise, is over $300 billion, even bigger than other, so-called emerging markets like Malaysia, Philippines, or Indonesia. And I know that a lot of investors are concerned about the liquidity of a frontier market, but our daily trading volume is above $1 billion. So the market is big enough. It's high liquidity, so it's you can trust on the market.
Just going back to the chart again, we have seen this downturn. What's been behind that drop that we've seen about 15, as I say, 17%, I think?
Correct. So despite the solid Vietnam macro environment, of course, we also have the impact from the global headwinds from the U.S. increasing rate, the crisis between Ukraine and Russia, and also the impact from the China COVID lockdown. We have the impact from the global headwinds, but we think it's a short-term fluctuation. Why for the long term, Vietnam is still a solid place which deliver high GDP growth.
We've got to pick up on the ESG side of things. I want to take a look at the environmental aspect in just a minute, but I want to talk about governance as well. In the West here, we're really pushing ahead with equal opportunities across gender and across other aspects of opportunities within the workplace. What's it like in Vietnam at the moment?
As you may know, Vietnam is still a young market. So far we see a development on the government's policy, especially on the listed market. All of the listed company now have in terms of board of directors, they all have the independent members. And also we also care about the gender equality in the board member constitution. And we see that the development of the government in Vietnam now is more transparency, and also to follow the standard of international.
How about the social side of this? Is there anything that's worth mentioning about the S in ESG, about the way companies operate within society?
For the ESG, we know that Vietnam is still in the low line. However, we do care, and we have the ESG management system in our investment process. We have built the system with the support from the IFC, and so far we also have some upgrade in our ESG management system to assess on the quarterly basis, and also have to care about the climate change risk, which could impact to our portfolio and investees.
That takes us into probably one of the most interesting areas of the general market at the moment, and that is this idea that we want to try and achieve an environmentally friendly attitude to our investing. How keen is Vietnam as a society and a government willing to engage with that? Clearly, with a lot of low-lying land and 100 million people in Vietnam, it's important that we don't see sea levels rise too much. So it's a key for the existence of Vietnam as much as anything. But do you think that Vietnam still has a way to go before it catches up with the West and the attitude that we have already adopted here about ESG investing?
Maybe I'm not in the position to comment about the change in the government policy. However, in terms of our portfolio, we have the risk assessment for the climate change in terms of physical risk and also the transitional risk in our portfolio. And we already published it in our annual report from last year. So we we work with a third-party consultant to do all kind of assessment for those climate change. Yeah.
Let's just bring it all together and talk a little bit about where you see things going in the rest of 2022. We've seen, as we've shown on the share price chart of Vale on the FTSE 250, that we've got this decline, which is not too far away from what we're seeing with the rest of the global markets. How do you see the rest of 2022 developing?
We believe the Vietnam economy is still on track to deliver 7% GDP growth, with the first quarter number is 5%. And despite the turmoil from the global headwinds, we are still stabilize the economy we are control the inflation well from 4 to 5%. And also the currency remains stable. We predict the earning growth for the listed market this year above 20%. And the correction, the recent correction in the market even provides you a cheap valuation. And I think it's a attractive level for investor to consider.
Well, look, it's a pleasure catching up with you. Thanks indeed for your time. Explaining about the Vietnam Enterprise Investments Limited. As I said, it's traded on the FTSE 250 with a market capitalization of 1.5 billion. That's Thao Ngo from Dragon Capital. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.